Hey everybody, Josh Sigurdson, World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen. And the Toronto real estate market is tanking. We've gone into this before. We talked about it for years, and really it was, I think, about half a year ago we really reported last on how we're seeing it start to tank, and we are seeing it tank that much more. This is the inevitable end of an incredibly manipulated, bubbled up with so much pressure market, and we're seeing that in many other places in Toronto or in Vancouver, San Francisco, London, Perth, and Sydney, Australia, Oslo, Norway, parts of Iceland. We're looking at the same kind of implementations that we saw back in 2007, the return of the collateralized debt obligations, credit default swaps, mortgage-backed securities, all this insanity, and looking into the facts in Toronto as Business Insider goes into, the city of Toronto has seen a 6.1% drop of the average house in Toronto. We're seeing the rest of the GTA without Toronto minus 16.1%. Detached houses altogether, 17.2% drop. Semi-detached houses, 8.6% drop. Townhouses, 2.9% drop. And then, of course, we see condos are going up at about 10.1%. And there's a reason for that. And that reason is basically because the middle class is drying up. The more wealthy are having to go to better, cheaper alternatives. People are moving towards condos more than detached houses or even semi-detached houses or townhouses. It's a cheaper alternative. So that's a sign that people are losing a lot of money. And we're also seeing home sales in Toronto fell 35% year over year in February. The average price is down 12.4%, and the amount of people buying up houses, detached houses, has dropped 41.2%. Guys, this is a serious issue that comes from a very unhealthy market that's overly over the top manipulated. This isn't true free markets. This is just banks for manipulation, government, red tape, etc., all piling onto itself. And there isn't the demand, but there's a lot of building. It's insane. John, go into what on earth is happening here?
Well, first of all, it was mass supply of both real estate and debt. That was the number one thing. There was a lot of people getting in and buying things. And then, of course, I'm looking at the numbers here. So, in April, when this started to really go downwards, they had a 30% year over year growth in real estate prices in Toronto. That's utterly insane. 30% in real estate. Now, first of all, my point of view, real estate, unless you really keep it up, it would have a depreciating value because the things in there, you have the house and everything is kind of slowly deteriorating over time. So it should really be a slowly deflating asset unless you make a lot of improvements to it. Yeah. But then, of course, people are just piling in. They looked at, you always say HGTV, they looked at that. It's a great opportunity to get in and flip some houses, make some money because the price was going up 30%. It's just ridiculous. Like, who can make just in a year 30% just on their investment by really not doing anything?
Yeah, I mean, the market was clearly bubbling, but people just saw it as a way to make money quick, but they don't know anything about the market. So as he mentioned, yeah, they see someone on HGTV tear down a wall, and then they fast forward to a month later and it's all fixed up nice, and they're like, I can do that, but they know nothing about the market. So they just put a bunch of their own money into this, in some cases hundreds of thousands of dollars. They gamble on hopefully it'll just keep going up and I'll barely have to do any work and it'll just snap a finger, magic wand, and everything will be better and I'll make money. It's just not that way. And of course, we see a lot of foreign investment. But I mean, let's correlate this, John, with the central banking system, which has been incredibly detrimental to this market.
Well, the central banks are what creates these bubbles in the first place. They're the ones lowering the interest rate when in this type of environment, the interest rate should be so much higher because people that are borrowing, they're a high risk, even though that they have money, suddenly they could lose their job, they just get out of business, and it's very fast that something can happen. Now, of course, with this whole real estate thing that is happening here in Canada, and it's Vancouver, it's even here in Winnipeg and other towns around Canada, where it was just a mass influx of that debt that was being made available by the central banks pushing down interest rates in order to manipulate the economy to not crash completely, because we've been in a depression since 2008. We have not been in a in a like they're saying that the economy is going up now, when really like Canada's economy just started tanking very recently, but it's really like started to get hit in 2008 under the radar. Nobody was talking about
But
it.
when you compare it to other, central banks, other currencies that are devaluing, in comparison to some, it's like, oh, well, it's going up in value. No, it isn't. It's just going down at a slower rate than maybe the US dollar in a lot of cases. And of course, the markets are so manipulated, they've been propped up into prosperity, quote unquote, and that means that they have to fall that much harder. And when they do come crashing down, it's going to be epic. Of course, the fundamentals are off the table due to the level of manipulation in the markets and the monetary system. So you can't put a date on when it's going to happen, but you know it's going to happen. Therefore, you have to be prepared and not depend on this market that's incredibly, incredibly manipulated and volatile and dangerous to maybe make a profit, when you should be looking to yourself, being prepared, overly prepared rather than underprepared. Food, water, shelter, self-defense, so you're not gathering things for the toughest guy on the block. Cash flow and capital gains, gold, silver, cryptocurrency that have core fundamentals, etc. But make sure that you're focused on doing your own due diligence and understanding these things. This is our opinions, not advice. But I mean, it comes down to just logic, guys. I mean, when we're seeing a market like Toronto or Vancouver, for example, Toronto seems to be a little bit ahead of the game from Vancouver, which will be going down the same route eventually, very soon probably. It's amazing that it hasn't already. Then people have to be prepared and understand the market, because if you don't understand the market, you don't understand how you're being taken advantage of. You don't understand how you're being shoved into debt servitude. You don't understand that if you are shoved down that bottomless pit of debt, you are forced to ask for a ladder up from the government and the banking system, which puts you in perfect servitude right where they want you. John?
Well, that's the thing with the whole system. You know, it's all based upon debt, and of course, people believing that their house is going to constantly go up, and some people even have their house as their actually, for the poor middle class, usually their house is one of their main assets in their retirement plan, which is a terrible idea, and that's what you're seeing here with these crashes. And of course, they use their house as an ATM. They were over leveraged. Their loan to value suddenly, just with a minuscule drop, suddenly they're in negative loan to value, where their borrowed money is actually higher than the actual value of their house. Yeah. And that's what you're going to see more and more. And of course, this bubble is going to continue to go down in Toronto, and you're just going to see it. Now, of course, there is, people and influx coming into the country constantly. And that's one of the major reasons why they were able to keep this bubble up in the first place, was the massive net migration into Canada. But now we're seeing kind of a slowdown in the economy, and where is all these people that came in are going to go? They're probably going to either leave Canada, or they're going to live on the tit of the government, unfortunately, because that's what the government wants. They want all these slaves that are
dependent people.
Yeah, exactly. They want them completely dependent on the government, and then coming to beg, save my house, I'm going bankrupt. Well, the government would say, well, if you do a deal with me, I'll give you some welfare over here.
Deal with the devil.
Yeah, and then you're an eternal slave to the government. And it's time for us to understand that and say, like, no, I'm not going to take any money from the government. The government is the one, together with the central bank, that created this problem in the first place. Yeah. And it's time to just get past that paradigm.
Yeah, well, you have to be financially responsible, financially stable. It comes down to you. Responsibility is the hallmark of freedom. But of course, your house is not an asset until maybe you've sold it, and if you're going through cash flow when you're renting it out.
Well, if you sold it for a profit.
Yeah, if you sold it for a profit, that is. Yeah, absolutely. But depending on that profit is incredibly, incredibly dangerous and can get you into very shady territory. And I think it's important that people understand this market if they're going to get into it. Money solves so many of the world's problems if you understand money, but it could also create so many of the problems if you don't understand money. And that's why it's so important. It's one of the most important things you can learn in life, which is why they don't teach it really in school. Anyway, we're going to keep going into all this stuff as it goes on. It just keeps unfolding. And of course, the city of Toronto is facing some serious problems. So is Vancouver. So is so many other places in Canada, the United States, elsewhere. So we'll continue to report on it. But again, be independent and don't depend on government government to get you to where you need to be, because even right now, all the banks are bankrupt. I mean, just don't depend on these guys.
Yeah, that's what we're seeing. We've seen Toronto and other big major cities. They're moving towards bigger government. That's a terrible idea. They're looking for the government to, fix the solution of what they created in the first place.
Yeah, perpetual, forever, Hegelian dialectic, a problem, reaction, solution, repeat for eternity. Let's break free from that, folks. Thanks for going into this with us, John. And until next time, this is Josh Sigurdsson and John Sneisen signing out from World Alternative Media. Find the truth,
Be the change.
Like what you see here, OM, don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so vastly demonetized and censored by YouTube as the ADL comes in and flags all of our content as hate speech. You can also find our Bitcoin address in the description as well as on the screen for you to scan, if you please. And don't forget to find us at Josh Sigurdsson at Steemit.com. That's Steemit.com, the future of social media, where you get paid in the upvote of your post in cryptocurrency, Steem that is. So don't forget to find us there. And until next time, this is Josh Sigurdsson signing out from World Alternative Media. Find the truth, be the change.